Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On tonight's program, I want to take a look at Bitcoin. Is it still in the buy zone, or is it dangerously too high and sucking a lot of people in, and it could really set them up for a loss when the market decides that the price has gone too high since Donald Trump has become the looming US president. And I also want to look at a number of stocks that really did well last week, namely Webjet, Life360, Pro Medicus, Polynovo, Lovisa, Megaport, and Telex Pharmaceuticals. I want to talk about them with June Bailu to see if they are in the buy zone or whether they're actually priced too high. I'll also look at Boss Energy. That's a uranium play, which I know June Bailu has liked in the past. And then we'll catch up with Paul Rickard of the Switzer Report to see whether he thinks Bitcoin is in the buy zone or should be treated with a lot of care. But before that, let's go across and catch up with June Bailu of Tribeca Alpha Plus. Well, joining me now is June Bailu of Tribeca Alpha Plus. Great to see you, June Bailu.
Great to see you, Peter. How are you?
Very good. Now, should the market be expecting a pullback? It's just the US market's done so well. Are you sort of saying to yourself, there's got to be a pullback sometime?
Oh, look, if you look at the line, you think, oh, yeah, it's got to be pullback. But my view is always that, as an equity investor, equity market investor, you look at the fundamentals, right? So the economy is holding up okay. It's pretty resilient here in Australia, in the US. And the good thing is inflation is cooling off, as not as fast as expected, but it's cooling off. So interest rate probably in Australia will get cut early next year. US has already started cutting. So, and then China, China started stimulating things, PMI looks kind of okay. So everything together, it's almost like, what is there not to like? And I know market's running very hot, but it's probably only certain parts of the market that look expensive. It's not everything, because a lot of companies' earnings is still lower than than what it should be, because they're being hurt by higher interest rate and others. So next year, with the interest rate lower, with inflation a bit better for the cost front, I think that things will continue to power on. So you know what? I think that pullback isn't likely to happen, and if it does, you'd be buying on the tip.
Would you ever have Bitcoin in your portfolio?
I wish I do, and search everywhere trying to find a proxy for Bitcoin. Unfortunately in Australia, the only one remotely close is Square. Because Square has that portfolio exposure to Bitcoin, but it is a bit volatile. But it's just we haven't got anything exposed to it.
Okay. The reason why I'm asking you about Bitcoin is it just seems to me it's a very speculative investment play, and it's probably better to buy it after it's been sold off. What do you say to that?
I agree with you. I think this one is very hard to buy, to see the way it's rallied. I know there's a lot. Look, the current price really priced in a lot of good news, right? So we know Trump is going to deregulate this market, and we know this Bitcoin is becoming, in a way, quite institutional based, right? Because it's going to go. It has all the ETF, it has all the large players now playing in this, and it is being treated as an alternative asset class. But like you said, it doesn't have any backing, right? So it is speculative. It's very speculative, and right now it's got all the momentum behind it, but it is risky. It can fall quite a lot.
Yeah, interesting that Zip has risen faster than Bitcoin, and so has Pro Medicus. And I'm going to ask you about Pro Medicus. Can we buy Pro Medicus at these levels, or do we have to wait for a pullback?
Look, Pro Medicus and real business is different. I don't believe, look, you can always buy on the pullback, but a lot of time you might miss it. Because those companies like Pro Medicus, like Zip, it's backed by real earning, real contract win. Yes, it's expensive, but, its growth, it's going to be so much larger in a few years' time. And, we can't wait for try and be tactical, but it's just very hard to see, how all of these momentum behind its business will unravel. Not only it's got high growth, its earning base is incredibly, so stable and resilient. Every time it wins a contract, it just keeps growing. And then once people start using its product, doesn't churn out because it's, already built into all the hospital. Everyone get used to using it. And then the more hospital use, the more they get paid. So, like we all know, everyone's taking more images, and like us, once you watch more TV, you watch more TV. So I think this company is well leveraged to future growth, and you just got to hold it. Yes, you can wait for a pullback, but my view is that I always have this company in my portfolio.
Okay, Life 360. Last week it was up 19.4%. It's up higher than Bitcoin this year. Is Life 360 a company with potential growth ahead?
Yeah, I do think so as well. This one recently we had a buying opportunity, didn't we? When it had a result, that's the thing. The share price has done so well. Many growth company, when the share price done really well and heading into any earning update, generally is creates a bit of volatility because people go, oh, is it enough? Is it not enough? They deliver a good result, but the share price has done so well, and then people were selling off. So on the day, I think it was down closer to maybe 8-10%, and it went down a little bit more. And now we sort of recovered, if not more. So I think this is another company that has shown really strong growth momentum. It's got a lot of opportunity ahead, monetizing its core subscriber base. It's going to generate more advertising revenue, and just at that tipping point of generating, huge amount of earnings momentum. So, to me, that's a buy.
Okay. What about Polynovo? Last week it surged 9.18% for the week. Is Polynovo in the buy zone?
Look, biotech, I do like them. I think with Polynovo, biotech to me is sort of sits in a slightly different bucket because they're very much dependent upon new product launches, and news flow about what is to come. I think the core business is very good. It's come through COVID well. Was a lot of challenge during COVID time where hospital delayed spend and like this is now sort of recover from it. So now it's showing last 4 months showing good earnings momentum and recovery. I still think the balance sheet might be a little bit tough, and also you probably need more product to come through to support them. This is almost similar sort of story as the Nanosonics as well. So a great company, core growth, core product is great, and it just you need the next product to come through to support the valuation. That's quite different from the other sort of tech growth businesses where they have a huge addressable market and they're just growing into them.
Okay, let's go and come back to the real world then, and a company like Lovisa, which I think you've liked at various stages. What's this current position, do you reckon, going forward?
Look, I do like Lovisa. At the moment, it's sort of stuck in no man's land, what we would call a no man's land. I think it's got great business model. It's got great international rollout profile. And it's got, the highest foot traffic per square meter, right? And as well as the sales per square meter. It's fantastic business. Only thing is that its CEO is leaving. And it's with such a long dated not retirement, long dated CEO transition. So the current CEO will leave by the end of by May or end of this financial year, so almost mid-year next year, and then we've got the new CEO won't start until May next year. It's kind of in a place where who's in charge of its growth story. So far a couple of updates recently has been pretty poor. Because the store rollout is slower than expected. It's really the store rollout slower than expected. But look, you can't blame them. The guy's leaving. So I just think at the moment it's in that hard place before the new guy comes in and say, here's a strategy. Are we still going to grow? Just a bit too much uncertainty at the moment.
Okay, what about one of my favourites that had a good week last week? Megaport was up 6.77%. Has it turned the corner, do you think?
Look, I think Megaport is somewhere in, it's getting close. I think the result was actually better than expected. I still am waiting for a bit more green shoot to come through with all the sales staff they put in place. We want to see more momentum behind this business. Technically, I think this business is, it's well played into that AI thematic, it should begin to see its new customer ads picking up substantially. So still waiting, perhaps another couple of quarters that will see stronger numbers.
Okay, one final one of the positives from last week was TLX or Telex. Hasn't it been a killer? I think it's outpointed Bitcoin this year for rises. But is there more upside for a company like Telex?
Yeah, see, that's one biotech I think is a great biotech because it's not just one product, not single product, and it's not trying to constantly prove what the next big thing will be, which will be challenging. This company, they run like a portfolio manager. They run portfolio products, so they always have something coming through. And in general, in total, the portfolio generate good returns. So it's more diversified. And I do like Chris, who runs the business. At the end of the day, you have to back the management to run a business like that, and then to run it well for so long.
Okay, now here's one I think I know you like. It had a bad week last week, namely Boss Energy dropped 11.7% to $2.71. Is this one in the buy zone?
Look, I do think uranium has been actually, been having very, very tough time, and I think the fundamental look very strong for uranium. And equities, I think at this point is still dealing with the uncertainties about, what's come, uncertainties with, policy changes and others. I think looking at the uranium prices, those uranium sort of equities are way undervalued. So I do like it.
Yeah. Okay, I thought you might say that. One
Mhm.
last one. Nanosonics. Have you got a view on Nanosonics?
Yeah, so look, I like the company. I literally just touched on a little bit earlier. I feel, look, it's got a great business. Our core business is doing quite well now, and in the double-digit recovery mode. And then it's the new business that we're waiting for the FDA approval. Now, recently, FDA has come out and said, look, we got some questions, but we're just waiting them to go through that. I expect that to be pretty positive catalyst for the share price. The new product is not going to be launched until next year, but it's all about the new product for this business.
Okay. One last question. I often have last questions. Just as I was listening to you, I came across Liontown. It fell 6% last week to 73 cents. But only about 2 weeks ago, I'm sure it was Goldman Sachs or one of those US companies, looked at Albemarle, and Albemarle was the one who was willing to pay $3 for Liontown not long ago. They gave it a good rating for the year going forward for Albemarle. So what's your overall view on the lithium play? Is it something we buy today because the prices are ridiculously low, then we just put it away and just wait for electric vehicles to take off and batteries to be everywhere, and that will be really good for lithium?
Yeah, look, I do actually think lithium looks reasonable, but I would be sitting in probably more, low cost as well as, companies with better balance sheets. So things like, PLS, the Pilbara, which is, already producing, got lots of cash on the balance sheet, can sustain at current low price level. That's a more stable way to play lithium. Lithium ultimately, China demand actually picking up quite strongly. It's the European demand that's sort of somewhat little bit soggy. So, with the rate cut cycle now picking up, we should begin probably another 6 months before we're seeing that improvement, and hopefully China will hold up in terms of their demand. So ultimately, we're seeing the supply side responded by shrinking a little bit, not fast enough. And if the demand does pick up, I think you'll see that price stabilization coming through, if not moving higher. And PLS probably is a better way to play.
Yeah, Pilbara Resources, minerals. Great for joining us, mate. Jim Bailu, have a good week or two, and we'll see you then. And good luck with the market.
Thank you very much. Thank you.
Well, now I want to catch up with Paul Rickard of the Switzer Report to talk about Bitcoin. A number of our subscribers, as well as my financial planning clients, have got the itch to buy Bitcoin as it straddles or approaches 100,000 US dollars. But from my point of view, I'm a bit suspicious that's probably gone too high, spiked unbelievably quickly because of Donald Trump looming as the next US president. I want to see what Paul has to say about Bitcoin at this point in time. What do you say about Bitcoin generally?
Look, I think Bitcoin has proved itself as something it does have that is worth something.
It's an investable asset.
It's an investable asset, and I think if you look back over the history of the price, it had a number of booms, had a big crash. It did a lot of work around between 20 and 30,000 US dollars about 12 months ago. It found a bottom there. It's run up very quickly in the last 12 months, more so since Trump was elected, but it's run up ahead of that too, and the expectation that he would be. And I think you're going to say that Bitcoin's going to survive as in some form, right?
Yeah.
I think it's here to stay.
Yeah.
So I'm not opposed to holding Bitcoin, but I just think you got to be very careful, Pete. I mean, the run's been so quick, and look, it's not new why the market's been backing it the last month. I mean, this last run up, before the US election, the best guide to sort of what the market thought about who was going to win was the price of Bitcoin.
Yep.
Everyone said Bitcoin was going to go up if Trumpy was elected because
Trumpy. Yeah, you're getting that closer now.
Closer. I'm adding an IE, right? Got to call him something, right?
Yeah.
And the theory with President Trump is pretty straightforward. He's going to kick out some of the anti-Bitcoin people inside the US establishment.
Yeah.
He said he sort of supported the Bitcoin users.
He's going to make Bitcoin great again.
It's possible he's going to add it to the US central bank's sort of part of their reserve portfolio, right?
Yeah.
And that's sort of the idea about giving it legitimacy and so forth. But Bitcoin was $72,000 before he was elected. It's now just under $100,000 US. That's a huge increase.
Big spike, short time.
He's not even elected. He's not even become president. So that's happened.
Yeah.
So I think you got to be a little bit cautious, Pete. But look, I think at a place, I'm not against having a bit in the portfolio, but I think there are easy ways to invest. And I think people jumping on now, you got to be really careful.
Yeah.
This is not new news. This has all been around for some time.
Yeah, no. But the normal person is starting to get the feeling for it. And often the smarties have got in early. That's my worry. And I want to make this point. So in March 2021, it was 61,000. And then and then by July, it was 31,000, basically halved. And then, but this is even worse. In November 21, it was 64,000. So it went up again. But by year's end, it was 16,000. So people have to understand this is a really volatile investment, isn't it? And my view is, Paul, if it goes down to 16,000 again, I'll buy, or even 30,000, I'll buy. But at 97,000, it looks high risk.
Well, you don't know what you're getting into. All we know is that the amount of Bitcoin is finite, right? We know that. We don't know who owns it. We don't know who's controlling it. We know that it gets driven up by lots of things. And so, like, if you want to invest in something you've got no understanding of and no knowledge of and no control over, go ahead and invest in Bitcoin.
Yeah.
But I'd personally rather invest in something I understand a little bit more as to what might be the drivers of the price. The only thing that I can see that Bitcoin's got going for it is it is the first digital currency, right? And it is finite. Well, we all know that,
and highly regarded by the tech fraternity.
And highly regarded. It's not a form of currency transfer. It's never going to be a digital payment mechanism. It could be a store of value.
Yeah.
But at least with gold, you could go back to gold as being the other classic store of value. People use gold. In manufacturing, right?
Yeah.
There are things produced out of gold for manufacturing and jewelry.
Some people have them in their teeth as well.
Some people have their teeth. So there's underlying demand for the metal. There is no underlying demand for Bitcoin apart from the fact that it's got a finite number of Bitcoins available.
And look, some people want to get into it because they see these fabulous returns, and it's up 150% this year. But I went looking for like normal businesses. Well, Zip's up 734%. Telex Pharmaceuticals up 149%. Life 360 is 229%. And Life 360 in particular is seen as a business of the future. More and more families are using it to track their kids down and they know what's going on in their family. But also, if you go to conventional businesses like CBA was up 52%, Xero was up 72%, Aristocrat Leisure 69%, JB Hi-Fi 90%. Now, I would rather risk my money on these guys. And by the way, as you know, most of the fund managers think these share prices will fall over the year, but I'm sure they're going to be halved. They're not going to be just disappearing like Bitcoin.
Yeah, and look, I had JP Hi-Fi in my list of top income stocks for 2024.
Yeah.
I bet and it has paid a really good dividend, right? It's blown me away with how far the share price has gone. I wasn't expecting that. I think that's the thing. You're right, Pete. WiseTech is another. It's up 70% this year. That's Australia's biggest IT company. Look, there are lots of businesses that you could find that have done as well or better than Bitcoin. So I think Yeah, it's hype, right?
Yeah.
You know, will Bitcoin go through $100,000 probably?
Probably.
Like, will
Yeah.
we get a lot of noise about it? Probably.
Yeah.
Is it something you want to get into? I don't know. Like, it's sort of.
Remember,
if you really want to get into it, don't bet your house on it, right? That would be my advice.
well, the
because
good fund
you are
managers-
getting in so far behind all the smart money. The
Yeah.
smart money's been in it.
Yeah, and the good fund managers say have 1% in it. All right,
Yeah.
but I say add to it, but buy when the price is down, and then put it in there, put it in the drawer, and it will have another nice rebound. But at these levels now, I think the potential gain for you is, let's imagine it goes to 120 and you buy at 100. Okay, you're gonna make 20%. There are lots of companies out there, like as I say, CBA was up 58% last year. WiseTech was up 91%. Goodman Group 64%. These are the sorts of companies I think are better to go looking for at these current high levels.
I think let's just compare it to CBA, Pete, because I think it's worthwhile expressing it, right? So CBA is currently $157, $158, paying a dividend yield of about 3.5%. So that's money you get every half year. What would happen to CBA in a crash, right? Let's talk about a crash, right? People get fearful of crashes. We had one in 2007. We had another big in 1987, 2007 coronavirus crash in 2020, right? Where could CBA go to a crash? I'd say it probably could go to about 100.
Yeah, or 100 or 100.
Right.
And about 100, real crash.
If you invested in CBA at
I'd be buying that like mad.
If you invested in CBA at $157, we had a crash. Let's say we have, nuclear war strikes out or whatever it is, and all the stuff that we're not expected, and unemployment goes to 10%, CBA could probably go to about 100, right?
Yeah.
Where could Bitcoin go to a crash?
About 5.
Yes.
6.
So you got to look at what you're trying to make out of it and what you're going to lose, what you could lose on it, and that's called risk reward. I would describe Bitcoin as extremely high risk.
Yeah.
Yes, you could make 20, 30, 40%, but you could lose 75 to 80% of the money, right?
Yeah. And we know that the market has been, especially the US market, has been rocketing along. And so I suspect 2025 will get away, but 2026 could be really vulnerable for the US stock market. And Bitcoin, is sort of tracking the big cap stocks as well. And so I just think that this is not the right time. Bitcoin's not a bad asset, but at these prices, it's a bad asset.
We should also just cover, I guess, is how you can invest in it, right?
Yeah.
So there are two ETFs, exchange traded funds, listed on the ASX
For Aussie investors, yeah.
Yeah, for Aussie investors. So you can own it directly, and you can go to one of the exchanges like Coinbase. A lot of regulation to get through there.
Yeah.
It's not going to be easy to open an account, but you want to own Bitcoin,
yeah.
So you go to exchange like Coinbase, or there are a couple of ETFs. BBTC from Van Eck is a Bitcoin ETF.
And that's pretty well tracks the Bitcoin price. Yeah.
You buy that on the ASX through your broker. So you can invest in Bitcoin, but
and you also buy chunks of it. You don't have to have a full Bitcoin.
You don't have to in fact, I guess most people aren't going to have a full Bitcoin. But whatever you do, don't risk everything, right?
Yeah.
Because we see this just the smart money, as I said, the smart money's already into it.
Yeah.
Right.
And we had the same argument when Afterpay was really high.
Yeah.
Great company.
Lithium, everyone knew how lithium was going to be. The lithium, which was once, that's at about 5% of the value it was 3 years ago, right?
Yeah.
Everyone was talking about electric vehicles. This is the hype, right? Bitcoin is in a hype, so just be wary about getting into it now.
Yeah. Okay.
That's our advice, Pete.
Yeah.
Exactly. Against it, but we're just,
cautious.
Yeah, we're conservative types of chaps, right?
Yeah, but ultimately we aren't tipsters. We're not punters. We're stock market educators, and we share the information from the people we know in the industry. But we just want to make sure that if you are going to go in, you go with your eyes wide open, and you realise you could be vulnerable at this point in time, because it is. I guess it's probably at record high prices now, isn't it? It's record high prices.
I mean, as I said, what's been driving has been the post-Trump environment, but everyone knew that beforehand. So it's not new news, and that's why it's moved from since he was elected on the 5th of November or the 6th of November, it's gone from $75,000 US to about 98. So it's already moved 30% roughly
Yeah.
in the last month.
Yeah.
Right? That's not new.
No. And that's Paul Rico of the Switzer Report. And that's the show for this week. Thanks for joining us. Don't forget, if you want to read more about what I have to say about Bitcoin, you will have to be a subscriber to the Switzer Report, where you also get access to a lot of other experts like Tony Featherstone and James Dunn and Rudy Philippek Van Dyke for a more detailed analysis of some investable opportunities. Thanks for joining us. See you next week.